Hello everyone. So today I'm going to solve some questions from cash flow statement. So try to solve these questions with me. So first, this is the problem 3. So what should we do first when we have a question? We have to calculate the increase or decrease from the balance sheet, because balance sheet is given and it is called the comparative balance sheet. And we are going to compare whether some accounts are increasing or decreasing compared to current year and the previous year. And what is the formula here? The formula is current year minus previous year. We see that cash increase $18,000 here. So cash increase $18,000. Accounts receivable decrease 10,500. Then inventory increase $4,725. Then prepaid expense decrease $2,860. This is the prepaid expense decrease. Then we find that we have a land and a land decrease 12,500. Then we have equipment no change. So accumulated depreciation, if you think this way, so equipment less accumulated depreciation. If you think this way, so accumulated depreciation decrease $10,000. Then same our building increase. Our building increased $33,000. And here accumulated depreciation increase $5,000. Accumulated depreciation increase $5,000. Then what about accounts payable? Accounts payable increased $3,865. Bonds payable increase or decrease? Bonds payable decrease $20,000. Common stock increase $20,000. And retained earnings increase $11,000. So this is your first job, to calculate increase or decrease. And the formula is current year minus previous year. Okay, so the formula is current year minus previous year. And if it is positive, then increase. If it is negative, then decrease. Then additional information you can see here. Net income increase $21,000. And we know that net income is accrual basis net income. So this is the accrual basis net income. So we have to convert it to the cash basis net income according to indirect method. So this is the operating activities. Operating activities start with net income, you know that. Operating activities start with net income, and this is the accrual basis net income. But we have to convert it to the cash basis. So this is the first additional information we solve. Okay, solve the first one. Now read the second one. Building sold. So we know that building is our property, plant, and equipment, and it is investing activities. Right? We know this information that building is our investing activities. We sold our building. We sold our building. The cost is $11,000. So this is the cost, $11,000. And accumulated depreciation is also given $6,000. And we receive cash $3,000 from market. So here this means that cash increasing, okay, cash increasing $3,000. Now what is the journal entry for this? That I already explained last class. I don't want to show it now. So here we have to compare book value versus market price. According to this question, from market we received $3,000. According to this question, from market we received $3,000. Now what is the book value? How to calculate the book value? Yes, book value is cost minus accumulated depreciation, right? So here book value is 5,000, right? $5,000. So book value is $5,000, market price $3,000. So we have a $2,000 loss, right? Am I right? So cost is $11,000, right? And accumulated depreciation is $6,000. So cost minus accumulated depreciation equal book value. So book value equal, you know that book value equal cost minus accumulated depreciation. Okay, cost minus accumulated depreciation. So book value is $5,000. Market price is $3,000. We have a loss. And look at here, this loss is a non-cash loss. Why non-cash loss? Because cash part is here. $3,000 is the cash, right? $3,000 is the cash. So this is the cash part. And this $3,000 means you sell your building, sell your building and you receive cash $3,000, and it is related with investing activities. So look at the investing activities. So this is the investing activities. Here you can see that we sell our building, right? We sell our, which asset we sell? Building. We sell our building and we receive cash $3,000. It is plus. So cash part comes to the investing activities. But when we sell our building, we have a loss. We have a loss. So this loss we transfer to the income statement, right? This loss we transfer to the income statement, but this is a non-cash loss. So this loss decrease the net income, but cash do not decrease. So that's why this $2,000 loss is going to add it back. Is going to add it back from net income. Non-cash loss. This $2,000 we are going to add it back to the net income. Why? Because this loss do not decrease. This loss is non-cash loss. Because of this loss, net income decrease, but cash do not decrease. So we added back this money. Now I am going to tell you one important point here. So if you find that you sell your asset, then immediately you have to do a short workings. So building is our asset at this moment, we sell it. So I told you that if you sell any asset, you have to do some workings. So what is the workings? So building had equal beginning balance plus new purchase minus sell equal ending balance. So these two numbers we cannot change. These two numbers given in the question, beginning balance and ending balance. Okay, these two numbers cannot be changed. Why? Look at the question. According to this question, this is our building. We sell which asset? Building. Yes, this is the building. So this is the beginning balance. 2018, last year is the beginning balance. So we cannot change this number, right? We cannot change this number. Beginning balance is given. Beginning balance is given. So here building. I can write here. Beginning balance is given. 77,500. Ending balance also given. Ending balance also given 110,500. So we cannot change this to number, right? And our question said that we sell building. How much building we sell? We sell building $11,000, right? $11,000 of the building is sell. So we have sell here $11,000. Now tell me, this equation at this moment is equal or not? That means, do we purchase any new asset in the meantime or not? Our beginning balance, that means 77,500. 77,500 is the beginning balance, right? 77,000, this is building, right? 77,500 is the building, and our beginning balance, I make wrong. Beginning balance is this one, right? Yes, I'm okay. Beginning balance is 77,500, and the ending balance is 110,500. Okay. So what do you think? Do we buy any building or not in the meantime? And how much this amount? How much this is the amount? What is the amount here? 44,000, right? 44,000. So if we put $44,000, then the equation is equal, right? Now we are lucky that our question already have this information. Our question already have this information that building was purchased for $44,000 cash. If this information is not given, for example, this information is not given, clear? I delete it, for example. I delete number 7. If I delete number 7, then this $44,000 we should consider, because when you buy asset, you pay cash. So look at the investing activities. Look at the investing activities. We buy building, purchase building. We purchase building and we pay cash $44,000. So we are lucky that this information is given in the question. This one is already given. Okay, this one is already given. If this number is not given, then we have to follow this way. Clear? Okay. So we done number 2. So I repeat again, if you find any asset that sell, please immediately do this equation. Okay, immediately do this equation. Now number 3. Now number 3. Bond were converted to the face amount, okay, by issuing $20,000 shares of $101 par value common stock. So this you will learn from your principles of accounting 1 that bond is our liability. Bond is our liability. Bond is our liability. Now this liability is going to convert. Liability is going to convert. That means we should not have any liability. It is going to convert as a common stock. As a common stock. That means convert means liability decrease. Liability, that means bonds payable should be decreased. Should be decreased, and common stock is going to increase. Common stock is going to increase. Now, what is the journal for this? The journal for this is bonds payable decrease debit. And common stock increase credit. So this is the journal entry. This is the journal entry for this transaction. Bonds payable debit, common stock credit, and the amount is so 20,000 shares times $1 equal $20,000. So this is the case. So my question is, bonds payable is financing activities, common stock also financing activities. So can we record it under cash flow statement? The question said that bonds converted into common stock, bonds payable debit, common stock credit. Can we put this information under cash flow statement? Of course not, because it is not related with cash. Okay, so this number should not record under cash flow statement. Now cash dividend. Cash dividend, again, look at here. Cash dividend, $10,000 were paid. And we know that dividend is financing activities. Dividend is financing activities, right? Now, if this number is not given, how to find? How to find the hidden dividend? How to find the hidden dividend if this number is not given? Yes, so look at the formula, very good. Retained earnings. I can show you the formula first. The formula is retained earnings, okay? Will increase by net income. And it will decrease by dividend. I told you that, for example, the question don't have this information. Okay, question don't have dividend. Clear? If question don't have dividend, how to find hidden dividend? Okay, my question is how to find the hidden dividend. It is here, retained earnings. Look at here. Our retained earnings increase $11,000, right? And what is the net income? Net income is $21,000. So retained earnings should increase. Look at here, according to this formula. According to this formula, $21,000 is the net income, right? $21,000 net income. So question said that our net income should increase, right? Sorry, our retained earnings. Our retained earnings should also increase how much? $21,000, right? So net income, $21,000 is going to add with retained earnings, right? Do you know that? Net income is going to add with retained earnings. So retained earnings should increase $21,000. But question said that retained earnings increase. Retained earnings increase how much? $11,000. Retained earnings increase $11,000. So what is the remaining 10,000? Yes, dividend. If we paid dividend here 10,000, right? Then look at it, 21,000 minus 10,000, right? Equal 11,000. Do you understand? So if dividend is not given, you have to calculate this way. Now we find that under the financing activities, we have dividend. So it is minus cash. Paid dividend, $10,000 minus. Paid dividend, $10,000 minus. So I will tell you if dividend is not given, how to calculate this. Again, you can see that land was sold for cash at book value. So if you calculate the book value of land, the formula is not like that. Cost minus so in case of land, we don't have any depreciation. Okay, land do not have any depreciation. Do you know that? You are learning accounting, you should know that land do not have any depreciation. So here accumulated depreciation is always zero. Accumulated depreciation is always zero for land. Okay, because they don't have any depreciation. So question said that land was sold. Land was sold at the book value. Okay, that means that according to this question, market price equal book value. Because here, if book value, look at here, if accumulated depreciation is zero, it means that book value equal cost, right? Because we don't have any accumulated depreciation. So book value equal, it is the cost. And question said that we sell land and we receive cash. Question did not give you how much cash you receive. Question did not tell you how much cash you receive. Just tell that we sell our land with the cost price because we don't have any accumulated depreciation with the book value. Now go to the land. This is the land. We find that land beginning balance $65,000 and the ending balance is $52,000. So land decreased $12,500. This is the amount of land decrease. Okay, this is the amount of land decrease. So that means that here the book value is this amount, because this is the amount of land, because book value equal cost, right? This is the amount of land decrease, and we receive the same amount from market. We receive the same amount from market. So market price is also $12,000. The market price and book price is equal. Okay, no gain, no loss. No gain, no loss. But we receive cash. So how much cash we receive? We receive cash actually same amount, $12,500 we receive cash. Now land is investing activities. This $12,500 will go to the investing activities. This is the investing activities. So we sell land, right? We sell land means we receive cash. We receive cash. Again, I told you that if you sell any asset, you can do this equation. If you sell any asset, you can do this equation. It will help you to find out the hidden information. Land beginning price, you can say that land beginning price $65,000 is the beginning balance. Is the beginning balance. And ending balance is 52,500. Ending balance is this. So 52,500. And we sell land 12,500. We sell land 12,500. So do you have any purchase, new purchase? Beginning balance $65,000, right? And we sell 12,500. Is it equal 52,500? Yes, right? It is equal. So we don't have any new purchase. We don't have any new purchase. Clear? Now operating expense include depreciation expense $21,000. So depreciation expense, you know that it is added back. It is non-cash. Depreciation is a non-cash expense, so it should be added back. Depreciation expense added back. So we done, and the last one, I told you that even this information is not given. Even this information is not given, we already calculate here. You already calculate here, right? Even it is not given, we already calculate. So we purchase land and we pay cash. So when we purchase land or a building, we should pay cash. Purchase building $44,000 and we pay cash. It is investing activities. So first we solve every of our adjusting entries, right? Additional entries. Now we go back to the main portion. We go back to the main portion. We know that this is the answer. This account is the answer. This account is the answer. $18,000 is our answer. This is the beginning balance. This is the ending balance, right? And the answer is $18,000. So look at here. This is our answer. $18,000 is the answer. And we solve every additional information. Now we go to the balance sheet. So retained earnings, look at here. Retained earnings already done, right? Because we know that retained earnings is the part of net income and dividend. We already record dividend, right? This is done. Look at here, common stock and the bonds payable. Bonds payable decreased $20,000. Bonds payable decreased $20,000 and common stock increased $20,000. These two account is the same, right? But we cannot record them under cash flow statement. Why we cannot record them under cash flow statement? Because the additional information said that additional information is the bonds payable $20,000 decrease because common stock increased $20,000. They are interchange each other. Okay, this $20,000, they are interchanging each other. So that's why these two items, although look at it, although they are financing, also these two items are financing, common stock and bonds payable. Right? Also, these two accounts are financing, but this question said that they are not involved with any cash. They are exchanging each other. Do you understand? Bonds payable decrease, common stock increase. So they are exchanging each other. So it is not involved with any cash. So we are not going to record these two. Clear? Then look at our accounts payable increase or decrease. Accounts payable increase, right? Accounts payable increase. We haven't solved this one. We already solved our depreciation. What we solved, I am going to mark first. We solved building. We solved accumulated depreciation equipment. We solved this account. Equipment do not have any change. Equipment do not have any change, so it should not come, right? No change. We solved our land. Yes. So these accounts are already solved. Because these accounts are already solved. Which one not yet solved? These three. This three is the current asset. And this one is the current liability. So these accounts not yet solved. Other part already we solved. Now look at current asset. Accounts receivable. $10,500 decrease. What is the meaning? And I told you that this is indirectly related with operating. Right? They are related with operating activities. Accounts receivable is the non-cash current asset related with operating, inventory related with operating, prepaid expense related with operating, accounts payable related with operating, right? Yes. So accounts payable, accounts receivable 10,500 decrease. Decrease means cash is with you. You receive this cash, right? So go to the operating activities. Plus sign, decrease accounts receivable. Decrease accounts receivable 10,500. We receive cash. Then question said that inventory increase. So non-cash current asset increase means you paid cash. So increase inventory means you paid cash. Increase inventory means you paid cash. You paid cash, it is minus. Then we have another non-cash asset. Sorry, non-cash current asset. It is prepaid expense. Prepaid expense decrease. Again, like this. Any non-cash current asset decrease means you receive this cash. Decrease prepaid expense. It means that we receive this cash. Now we have accounts payable remaining. So we done these three. We have accounts payable remaining. Accounts payable increase. What is the meaning? Your liability increase means you receive cash or you pay cash. Accounts payable increase means the cash belongs to you. Okay. Accounts payable increase means it is other people cash but holding by you at this moment. So this cash is now with your account. So increase accounts payable. Increase accounts payable. Now, when we do this kind of plus and minus, the amount is $56,000. The amount is $56,000. Then when we do plus minus of investing activities, we find that it is minus 28,500. Okay, so we find that $56,000. We'll find minus 28,500. And we have $10,000 financing activities. It is minus. And you can see that the equal is $18,000. Okay. Equal is $18,000. So this is question 1. Let's go to question 4. So quickly calculate the increase or decrease. So cash increase or decrease here, cash increase. Cash increase 3,500. Then other current asset increase 12,500. Investment decrease 21,500. Investment decrease 21,500. Plant asset increase $60,000. Plant asset increase $60,000. Then accumulated depreciation decrease $10,000. Then current liabilities increase $9,000. Then bonds payable increase $37,000. Then common stock increase, no change. Common stock, no change. Retained earnings increase here $18,000. Retained earnings increase $18,000. So again, for example, look at number 4. Number 4, for example, this is missing. This is missing. How to calculate the hidden dividend? So net income should increase $23,000, right? Sorry, retained earnings. Because net income and retained earnings have the connection, right? Retained earnings should increase $23,000 from net income, but increase only $18,000. That means less increase. Why? Because we paid dividend. Because retained earnings, net income plus, right? Net income is plus, and dividend is minus. Dividend is minus. Anyway, we so find this increase or decrease. Now we can go step by step. Net income $23,000 is here. Net income $23,000. We done this part, right? We done this part. Net income is done. Depreciation $10,000, right? Depreciation is going to add it back plus depreciation expense. depreciation expense is going to be added back $10,000. So we done number 2 also. The company sold $4,000 of plant asset. Company sold $4,000 of plant asset. Again, if you sold any asset, okay, if you sell any asset, you have to do some workings to find hidden information. Clear? I will show you again later on. The company sold $4,000 plant asset, and the cost was $25,000. Cost was $25,000, and accumulated depreciation was 80%. Now we have to convert accumulated depreciation from percentage to a number. So how to calculate the book value from this question? Book value equal cost minus accumulated depreciation. So this is the book value formula. So cost is given $25,000. Cost is given. And what is the accumulated depreciation here? What is the accumulated depreciation? Accumulated depreciation is the 80% of the cost, right? What is 80% here? How much is the 80% here? 20,000, right? Yes. 20,000 is the 80%. Now what is the book value at this moment? So book value is 5,000, right? $5,000. So book value is $5,000 versus market. How much cash you receive from market? From market you receive $4,000. From market you receive $4,000. Do you have any gain or loss? You have a loss, right? So $1,000 loss, right? $1,000 loss. And loss. And this is a non-cash loss. This is a non-cash loss. Now this non-cash loss is going to add it back. This $1,000 is going to add it back, right? Add it back. And you receive cash from market. You can see that. How much cash you receive from market? $4,000 cash you receive from market. Why you receive cash from market? Because you sell your plant asset, right? So this is investing activities. So this is investing activities. We receive $4,000 cash from market. Why we receive this cash? Because we sell plant asset. We sell plant asset and we receive this $4,000. Clear? Now I told you that if you sell any plant asset, okay, now we have to find some hidden information. Plant asset equal beginning balance plus new purchase minus sale equal balance. So beginning ending is given in the question. Plant asset beginning is 107,500. 107,500. Beginning is given. 107,500 is given. Ending balance 167,500 is given. 167,500 is given. Okay, so this is given. We cannot change this number. We cannot change this number, right? And the question said that we sell plant asset. How much plant asset we sell? $25,000 plant asset we sell. We sell $25,000. Now tell me, tell me 107,500 minus, right? This is minus, right? Minus $25,000 equal 167,500. Is this equation equal? Because this is the given information in the question. We cannot change this number, right? We cannot change the beginning balance, right? We cannot change the beginning balance. We cannot change the sales number. We cannot change the ending balance. So beginning balance minus sales equal this amount. No, that means we purchase something that is not given in this question. This question did not tell you. This question did not tell you whether we purchase any plant asset or not. Do you understand? But it is hidden. It is hidden and it is included here. That means in this year we buy 85,000, 84 or 85, $85,000. $85,000 of plant asset we buy in this year, but it is hidden. It is hidden in this question. It is not mentioned in the. It is not mentioned in the here. Clear? Do you understand my point? So this number we have to do calculation by this way. So $85,000 minus $25,000, okay, equal $60,000 here. Do you understand? This is the net increase. This is the net increase, $60,000. How? We buy $85,000 and we sell $25,000, equal $60,000. Clear? So this amount is not given in the question. This is hidden. Now we calculate this and we have to record this. We purchase plant asset, and you know that if you purchase plant asset, you paid cash. So purchase plant assets, and we paid cash this money. So our question did not give this information in the additional information, but we calculate this hiddenly. Okay. So we done number 1, 2, and 3. We done. Then number 4. Again, if it is not given, we know how to do that, right? So dividend paid $5,000. It is here. Financing activities minus paid dividend. Minus paid dividend. It is $10,000. How much dividend? 5,000. Dividend is $5,000. So we done dividend. Now we sell another asset. Again, you have to do the workings. We sell another asset. Anyway, we have to see whether we have any loss or gain or not. We sold $17,000 investment. Okay. We sold $70,000 investment, which cost was $21,500. So again, investment do not have any depreciation. Do you know that? Investment don't have any depreciation. So investment is the here. This is cost equal cost is the book value now. Cost is the book value now because they don't have any depreciation. Now you compare book value versus market. So book value is 21,500. And from market, we receive $17,000. From market, we receive $17,000. So we have a gain or loss here. We have gain or loss. Loss, how much? Yes, 4,500 is the loss, right? And this is non-cash loss. Non-cash loss. So if we have non-cash loss, okay, we have to add it back this here. Non-cash loss 4,500. Now I told you that if you sell any asset, immediately you have to do workings. to find the hidden number. Now I can copy and paste here this one. Because we do these workings because we sell plant asset, right? Now we sell which asset? Now we sell investment. Now we sell investment. We sell investment. And what is the beginning balance of investment? Beginning balance is 26,500. This is the beginning balance. Okay. 26,500. 26,500 is the beginning balance. We don't know whether we purchase or not. We don't know. We know how much we sell. We sell 21,500, right? We sell this. This is the book value or cost price we sell. So we know this sell. Sell is 21,500. And the ending balance is given. Ending balance $5,000 given. Ending balance $5,000 given. Given. Now see here. 26,500 minus 22,500 equal 5,000. Yes, right? Equal 5,000, right? So we don't have any purchase. We don't have any new investment purchase. Compare these two. Compare these two. So here, this amount minus this amount is not this one. That means we purchase in the meantime, right? We purchase in the meantime. So here, beginning balance given minus sales equal 5,000, right? So we don't have any new purchase. Okay, wait a moment. Sell is 21,500. Yes. 21,500. Yes, sorry. 21,500. So 26,500 minus 20. Thank you very much. Minus 21,500 equal 5,000, right? So it means that we did not have any new purchase. But here you can see that here it is not equal. Not equal. That means we purchased something new. Anyway, we done all the additional information. Then we go to the balance sheet to see whether we have any remaining or not. Okay, whether we have any remaining or not. So we know that this is the answer. This is 3,500 is the answer, right? Then we done this one, investment we done. We done plant asset section. Then we done retained earnings. We cannot do anything with common stock. Why? We cannot do anything with common stock. Why? Because no change, right? Do you understand? No change means cash is constant, no change. Then we done our depreciation. Who are the remaining? Remaining is current asset. Increase or decrease? Current asset increase, right? Non-cash current asset increase means this cash is not with you. Clear? Non-cash current asset increase means this cash is not with you. So operating activities, we know that this is operating. So minus increase non-cash other assets. And it is 12,500. So this money is not with me. Because it is non-cash item, increase means it is not with me. So we done this part. Who is the remaining? Current liability. Current liability increase, what does it mean? Current liability increase. Yes, this money is with you, right? Very good. This is other people money, but you are holding this now. Increase accounts payable. So we are holding this money. Okay. So accounts payable, we also done. Current liabilities part we done. Who is the remaining? Bonds payable. Bonds payable increased $37,000. There is no information in the additional information. No information about. No additional information about bonds payable. But balance sheet said that bonds payable increased $37,000. What does it mean? Bonds payable increased $37,000. There is no other information. What is the meaning? Bonds payable is your liability, right? Liability means this is other people's money. But who is holding now? You are holding now. This is other people's money you are holding. Clear? And this is which activities? Operating, investing, or financing? This is financing activities. So go to the financing activities. This is the financing activities. So we are holding other people money because increase bonds payable. Increase bonds payable. We are holding other people money and it is 37,500. Yes. So we done every part. Look at here. We done every part of this question. We done additional information, right? We done our balance sheet increase or decrease, and we also calculate whether we have any hidden or not, right? Whether we have any hidden information or not, we also did it. Now, this is the time to make the balance. So now you can say that cash flows from operating activities is $35,000. Cash flows from, so sell plant asset. So we forget to write sell investment. And remember, we sell our investment. We sell investment. I forget to write this amount. We sell our investment and we receive cash $17,000, right? We sell our investment and we receive cash $17,000. I forget to write this. Yes. So the balance is now minus $64,000. And we find that financing activities balance is 32,500. So 35,000 plus 35,000 plus minus $64,000 plus 32,500 equal 3,500. Okay. Now problem 5. So look at the problem 5. We have additional information. We have additional information, right? Dividend $7,000 was paid. I delete this whole part. I delete this whole part. Do you understand? We don't have any additional information. Even if we don't have any additional information, we can solve the question. Now, how to solve this question? Try to record increase or decrease first. Here, cash increase this amount because all the previous balance 0. Accounts receivable increase $18,000. $18,000. Accounts payable increase. Accounts payable increase 2,500. Common stock increase $30,000. Retained earnings increase $10,000. And our net income is $17,000. Look, retained earnings should increase. Retained earnings should increase here. I can write here $17,000 because we transfer net income. We transfer net income to the retained earnings, right? We transfer net income to the retained earnings. Retained earnings should increase $17,000, but we find that retained earnings increase only $10,000. What is the meaning? The meaning is minus $7,000 dividend, right? Minus $7,000 dividend. So we don't have any information here about dividend, but this $7,000 is the dividend. Clear my question? Now net income goes here. Net income $17,000. We put here. Now we go one by one, and this is our answer. $24,000 is the answer. 24,500. 24,500 is the answer. Now accounts receivable increase $18,000. What is the meaning? Cash is with you or not with you? Accounts receivable increase 18,000. Cash is with you or not? No, right? It is your money, but holding by another people. So minus increase accounts receivable. Accounts receivable increase means this is not with me. This is not with me. So we done accounts receivable. Then accounts payable increase 2,500. What is the meaning? Your liability increase. It is this cash is holding by you or other people? Holding by you, right? Yes. So increase accounts payable. This money is holding by you. So we done accounts payable. Common stock increase. We do not have any additional information anyway. Common stock increase $30,000. What is the meaning? This money is with you or not? Common stock increase. When your common stock increase, if you sell common stock, right? You sell common stock, so common stock increase. So $30,000 you receive cash. And which activities? It is financing activities. Issue common stock. This is financing activities. Issue common stock. $30,000 increase. Okay. So we done common stock. And when we do some workings for retained earnings, we find that retained earnings should increase $17,000, but actually retained earnings increase $10,000. The difference $7,000 is the dividend, right? So we paid dividend. So you should know how to find the hidden information. If you want to answer this question accurately, so today I already discussed everything, how to find the hidden information, okay? It is minus. And we done everything. We done everything, and we find that we don't have any other investing activities. So investing activities don't have any information. Investing activities is 0 here. Investing activities is 0. No information in the question. So what is the operating activities? So operating activities here is 1,500. 1,500 is the operating activities. Investing activities 0. What is the financing activities? It is $23,000. So 23,000 plus 1,500 equal 24,500. This is the answer. Okay. So I think this is the last class for cash flow statement. So solve this question again and again at your home. Try to understand how to find the hidden number. Then you can easily answer the question in the exam. Okay.